Investor Ty Young says you could bet that that is what's happening here. And worse yet, this is a bubble already in slow motion implosion here. Ty, obviously you're not a fan of Facebook, but more important, you're not a fan of the way investors are behaving here, right?
You know, I'm really not, Neil. Thanks for having me back. It's starting to look like 1999 to me. It looks like the dot-com bubble 2.0 setting up, because what we have is astronomically high PE ratios, and no one seems to care. People are buying stocks because they have a website. Now, certainly Facebook, they have social networking and 900 million people on there, and there's value to social networking, but what do they really do? What do they produce? Well, they sell advertising, and mainly click-through advertising, which has proven to be a bit disappointing, and that's why, as you pointed out, GM is pulling out. So back in 1999, we had irrational exuberance, according to Alan Greenspan, and it looks that same way to me right now.
You know, I was reviewing, for getting ready for smart guys like you, that's what I have to do, but I was reviewing the initial response and the naysayers to Google and to eBay and to Amazon.com. And while the stories varied a little bit and the valuations and the way you're going to make money thing varied a little bit, it was similar. Now, those guys survived. They were one of the, and among the few survivors of the internet bubble. Could this be?
Oh, I think certainly that Facebook survives. Mark Zuckerberg is a household name. Facebook is a household name. They made a movie about them. 900 million people are on Facebook. But the real question is social networking a sustainable model to generate revenue and to build a portfolio around? And at this point, as I look at it, I'm not so sure.
You know, the rule of thumb, guys like you always tell me, is can you make money and leverage off that brand? In their case, as you said, you know, almost 1 billion users. That's a great deal which to leverage off of. And there are a lot of companies that not only do business on their site and draw eyeballs to their site. The trouble is when they advertise and you have a choice as a user to point and click and see what that ad's about on that site. GM said not too many were doing that. Now that could be a reflection of GM, and people hate GM because Ford is sticking to this. But you do hear a lot of those kind of stories. And I'm wondering whether that's why, coupled with reports that insiders could sell out sooner than we thought, and early investors could cash out earlier than we thought, whether it's sort of like the perfect storm.
Well, certainly, as you look at point-and-click advertising, the results have been disappointing. Why GM's pulled out and Ford hasn't, the jury's still out. But the reality is, looking forward, as we look at the Facebooks and social networking, that's here to stay. The question is, can it be monetized and monetized effectively through leverage and continue to grow and continue to prosper and justify PE ratios of 100? That's an awful high PE ratio to justify. So I do think people will make money on the IPO if you can get stock, and certainly the first day it might double or triple. But as a long-term play, I'm not quite as certain.
All right, so the people who say, you know, you get up to making $250 a share, you're all of a sudden talking about a valuation that is more realistic, down to earth. That is not a huge leap for a company like this to do this. They're a long way from doing that. But in other words, that they could grow into these valuations. You have your doubts.
I do have my doubts. I think it might take a long time. And again, their biggest source of revenue is the click-through. They do other things, certainly, right, but the click-through advertising. And, you know, 30-second TV spots are dramatically more effective, research say, than that. Until they find something that's as effective as the 30-second TV spot or the radio, 60-second radio spot, then it may be in question what their long-term outlook is.
Or like a 30-second TV spot on Fox Business Network, you know. That's
what a great idea.
Gold mine. All right, TV is the answer, I guess. Ty Young, thank you very much. Good seeing you.